Hey there guys, my name is Marcus, and in this video I'm going to present you the top 7 investing mistakes people are doing when they are investing through Trading212. I'm someone who is using Trading212 actively, but I'm a long-term investor. I'm not a day trader, and I don't ever say that to what you should actually invest to. This is just like my advice of what kind of mistakes people are doing when they want to invest money. So let's begin, and I hope you will enjoy this video. Now first, I'm going to show you my earnings right here. Is that, as you can see, I got investing about 15K right now, and I got another 4K, 6K, 6.5K on Revolut. And I'm 24 years old, and it's like doing really well. But as you can see, I'm not a trader, and I just like buy the stocks that I believe in, kind of what they're worth and their background. So let me just like explain some stuff and what you should try to get from this video. Now, the first mistake most people are doing is that they are constantly watching the markets. This is something that if you're a long-term investor, if you're a day trader, it's a completely different story. But if you are actually holding, you don't want to constantly, because look, I was like at one point 600 euro down, then 500, look at this, 70, 800 at one point return, minus, but look at this right now. I'm not even going to sell because I need to hold for 1 year a stock, so I don't pay taxes in my country. But if I would be constantly watching the markets, I would be literally selling at like whatever point. The really important thing is that focus on how you can actually earn money and just pump it to the market, but have also a huge emergency fund that you can use. That's really important. Now the next thing is that chasing the trends. This is something that a lot of people are doing, is that when they see some stock, AMC, whatever, and they're like, oh my god, I need to jump on the train, I'm going in for whatever reason, pumping the penny stocks, you know, when I have also some penny stocks right here. Penny stocks, the one-stop system that was like right now it's good, BioKey, and every others. And it's like, damn man, when we go to 1 month. So you don't really want to jump into that. And I'm really gonna see one stock now because I'm really interested how it's like doing. So Coinbase stock was one of them. And let's see how it's doing. Right now, it's like, look, it dropped heavily, only because like I believe that a lot of people are interested in Coinbase. What do I mean is that it peaked only because people are not really interested right now not in Coinbase, but in crypto in general at this point. When the boom is going to be with crypto again, like 1 year from now or 2 years, invest to Coinbase. That's what I would possibly do. That would be like really good strategy to think about. Because like right now, when everything would be pumping up, the Binance, the Coinbase, and the big players like Crypto.com would be growing too. Now then, following the bad advice from social media and also from me, this is really important, is that don't just like follow because I say that, oh my god, I just said to you that Coinbase could be possibly good in the moment when like crypto is going to be more popular again, right? So when I look on Coinbase right now and we look on the popularity of it, you see that it dropped heavily. When you look on Bitcoin and popularity of it, it dropped again, right? Crypto. See? Same style, same thing. And this is what I use. Like I invest based on indicators of the popularity of the platform, and when I make YouTube videos, how people are actually using the platform. That's why I invested to Asana, and you see that, oh my god, you can say that, oh Asana, that's a luck you got there. But like, no, because I work with project management softwares and I know ClickUp, Monday.com, and any other, and Asana is really good. So therefore I invested, but I did my own research for it. I didn't trust social media, what someone said on Reddit. So this is something you have to keep in mind when you want to invest and like to Asana, as you can see. Now, that's another thing, right? The third thing is that not giving your investment time to grow. This is another thing. That's the fourth tip. So when people are actually starting to invest, they don't think that they have to like wait a while. Like it's going to take time to actually grow, right? And that's something you should definitely keep in mind, to let investment time to grow. And then the next mistake that I know that plenty of people are doing, they are actually investing money that you will need. So what does it mean? Is that people come and they like have 2K on their account, but they want to get rich quick. So they're gonna invest 1.5K to stock, to some penny stock, but they will need the money for the rent, etc. Like I started investing when I had my emergency fund. Right at this point, I have a value of, I don't know, 5 figures right now. And I don't really need any more emergency fund. I have it for YouTube. If something would happen with YouTube, I can start whatever project and I can live from emergency fund for a few years. But you see, right, that it's going to take time. And it took me a lot of time to get to the point. Not a lot of time from the perspective of the society, but from my timeline, my own timeline. And that's something you should definitely keep in mind. Don't invest the money that you're actually going to need in the next half a year. Like I wouldn't do it. It's really risky. And then having unclear investing goals. This is another thing that plenty of people are doing, is that they don't really know what they want to invest to, why they're actually investing, what are the purpose of their investments. So you want to actually focus and research why you want to invest. Do you want to acquire financial independence? You have a lot of money on your bank account and you don't want to lose it to inflation. What is the reason why you want to invest? Do you want to save up for a home? Or why? For the kids? What? So this is something we have to figure it out. And that's really important. Now, the next one is the delaying investing altogether. That's the last one. Really important. Is that plenty of people, when they have money, they're like kind of afraid of the market. It's like, oh my God, but what if I'm going to lose money? Then you're going to lose money. It's all right, man. I know it will sound really strange, but it's just the money. And that's how I perceive it. Like when I see that you would drop 90% of my portfolio, whatever, you know, I believe in those companies. Whatever, it's all right. So that's what I do. Like I look on the markets from 10-15 years window, not on the window of 1-2 years. So I know that from the 10 years perspective, I'm going to have like 150-200K here. And that's going to do really well at the point, possibly even more money. Who knows? But this is pretty much it. So these are the mistakes that you should be careful about when you want to use Trading212 and you want to invest. Definitely check out the pies. As you can see, like the arc was really good. Let me show you. The arc was really good. But yep, so when arc.com, arc funds. See, it was doing really well, but it's like steadily right now. In 1 year, it made like triple the price. So it was like really good. Definitely check the ARC ETFs. And ETFs are a good way how you can invest money. And that's pretty much it. So thank you very much guys for watching. I hope you enjoyed this video. Have a great day and goodbye. See ya.